we know we're going to get it. And like, as soon as we get it, it's just going to be, I don't want to talk too highly, but we're very sure we can take whatever we get and make it profitable. Like we have the experience, we have the knowledge, and he's also, and he has a very super active role. Like so we split it up. Yeah, as we should. And then we got a loan for the new machines. And then we offered for people to buy in more. So we said, hey, instead of having a loan, would you like to have All right, everybody, welcome back to another episode of the 1% Podcast. I am your host, VIN End.
And I'm Shane.
And today, Shane's going to take the reign.
Yes, about time. That's it, taking the reins. Welcome to the 1% Podcast. I'm Shane. I'm your host, Shane, and this is... Oh, not this one.
All right. We already did that.
I know, I'm taking the reins, Vin.
You took him in the wrong direction already. All right. See, I tried to let you lead. Shane is no longer leading today's episode. I'll interview myself.
All right. So today we're going to interview Vin, and we're going to talk about investments. Specifically, a few that I have a lot of questions on that we started talking about 20 minutes before, and we just kind of got carried away. So I'm like, you know what? Let's just record this. So here we are.
Oh, is that what we did? Is that exactly how it happened?
Maybe it was 31 minutes. Okay. Maybe it was a little longer than 20.
I don't know.
All right, so Vin, the first things first, give the people an overview of what you're currently investing in and essentially why before we dig in.
Well, I do it because I don't want to work anymore.
Amen.
But the bigger reality is I do try to see what I can do that, one, interests me, and two, that I know enough about that I have confidence in. I think a lot of people get caught up trying to invest because they want to make big money, but they don't know what the heck they're doing. And so they lose their investments a lot of the time. And I was somebody who's done that a lot, actually. I've lost a lot of money in the stock market because I was always trying to make it big. And I am not a day trader and I don't know what I'm doing. And that is how I lost a good bit of money. So I've now come to a rule of if I don't understand it, I don't invest in it. Or if it's political or it's pandering of any kind, I also don't invest in it. So now I just look for things that I think are very safe. So I like to invest in, honestly, virtually anything that's a dividend stock. Most dividend stocks are pretty safe, especially a REIT, which is a stock that is based on real estate. So one of my favorite ones is it's called AGNC. By the way, this is not financial advice. This is specifically what I am doing.
We'll probably
I'm not telling you to.
Times today.
Yeah, we have to. We're gonna, because we're not trying to get sued by the FCC or anybody else, or the SEC or any of these other ridiculous.
Any of the C's, we're not trying to.
Yeah, we're not trying to. Yeah, everybody who's from the government, just leave us alone. Anyway. So I specifically love this company because it's all about it's backed by the government. And they are in the mortgage industry. So I think that's a really great industry. Real estate is typically, historically, maybe volatile, but it's also relatively safe, especially when backed by the government, right? So I love this stock more so because it actually pays a monthly dividend, which I think is really, really cool. So most stocks will pay a quarterly dividend or yearly, but this one is monthly, and I absolutely love it. So if you get enough money in there and your dividend is high enough, you could even potentially pay some of your monthly bills with it, funny enough. So I do that. I invest in tech. I love tech. I understand tech because I've been a nerd my whole life. So I'm always excited when a tech stock is really good. Like, needless to say, everybody should probably... Oh, wait, I can't say that.
You're going to everybody should invest in what?
No, nothing. Everybody should do their homework, but but I've always looked at like Apple as a massive winner because no matter what anybody has to say about Apple, it always historically in my eyes or in my research has been rising. And then once it rises high enough, they cut it and it rises again. And so I've always been a fan of investing in that, of Amazon, like all the good stocks, right? All the good tech stocks. I don't like doing risky stocks anymore. Like, oh, this can make you a 500% ROI. Cool. Good luck to you. And maybe you'll get the 500% ROI, but here's the thing. I would never kick myself and be like, oh, I missed out. Like, I refuse because I don't know enough. I refuse to put my money in crap like that. So it's always a safe dividend type stock or a very safe growth stock. Like Amazon isn't going to pay me dividends, but Amazon's always going to grow, in my opinion. Like I could be wrong unless something bigger and better comes around, which I doubt,
Yeah.
but it's going to grow. And if they ever hit a point where they stop growing, maybe they'll become a dividend stock. I don't know. So I like to just get passive income, and that is true passive income. Like as long as you're in a dividend stock, that is actually passive income because you literally do not have to work for that. Every other investment you're going to have to put in legwork with.
So for dividend stocks, explain to the people what's a dividend stock compared to a regular stock. Are you taxed on this? Is there capital gains to this when they actually do pay you out? Let's start with that.
Yeah, I mean, so you are taxed on it. At the end of the year, you'll get a form from your brokerage that says how much money you've made, because the dividend is actually earning money. Like the dividend is money that is put into your account. Now, what you can do is you can continue to reinvest it. However, the thing is that you've made that money technically. Like it's been yours, it's transferred into your hands, and at the end of the year, when you get that sheet, it'll say how much you made from your dividends. So you are supposed to report it. I know that your firm, whoever you trade with, will be reporting it because that's also how they give you your report. Capital gains is, I believe that I honestly don't fully know. I gotta be honest. Like that's something that I have to consult with my accountant on more. I'm assuming it would potentially be just classified as a regular income because you're not actually like holding and selling, right? When you get a dividend, it's actually just you're getting paid out. Whereas from my understanding of how capital gains works, it's because you've held something and it's increased in value. Like if I held the stock and bought it at $10 a share and sold it at $12 a share, however long I held it, it accumulated value and then I sold it, and that's a capital gains tax. But I believe the dividend is more of an income tax. So check with your CPAs or whoever, because I don't actually know to give you the answer, but that's my assumption based on what I know about capital gains.
Okay. So you're mainly into real estate stocks and into stocks that are very safe. My first
Yep.
question is, and I don't want to, alter too fast, but what about any risk? Do you gamble at all? Is there any high risk, high reward? Is it because you've lost so much in the past that you're just like, I'm staying away from it, I'm going the safe route? What's
Yeah,
the riskiest, percentage or, dollar amount or whatever that looks like to you?
I don't take risk because of the fact that I don't actually keep up with it. You can't risk it if you don't have enough information. Like people that are taking risks should realistically, and this is what I was doing when I was trying to do day trading, and to some degree I was moderately successful. I mean, I probably had more losses than wins, but my wins were okay. But you really do every single day. You got to read, you have to educate yourself on what's going on with your stock. You have to be aware if like there's any news. I mean, sometimes you just get screwed, right? Because it will be 10 o'clock at night and some terrible news comes out, but as a regular seller, you're not going to be able to sell anything or do anything until 9:30 a.m. So you will also get screwed because there is another stock market that you're not a part of, that trades are being made all day every day, and you're not going to be able to do that. So it's typically the retail investor that gets screwed on a lot of deals. So I've decided to stop because I also just don't have the time. Or let's actually be more real. I don't want to prioritize sitting there every single day trying to read and understand things because it's just not important to me. And I
Job.
like having a consistent income.
Right. It's another job for sure.
It is. And I actually did commodities trading for a little bit where I was trading gold on on the Forex markets. And dude, when I tell you it really was a second job, like I would log on to the computer and be here from probably 8 or 9 a.m. until like 12 in the afternoon. Actually, earlier, it's like 7 a.m. until 12 in the afternoon. It's like my whole mornings. I would go to the gym and I'd be looking at the freaking thing. Then I'd come home from the gym and I'd shower and look at the thing in the shower. Then I'd sit in front of my computer when I was done showering and eat my breakfast and stare at this damn thing. I'm like, dude, I want to do this. I have too much to do. So I stopped doing that. And I forgot to explain for those of you who may not know, if you're really, really new to investing, what a dividend is it's like I said, it's basically just getting an income. The company essentially pays out their earnings to the shareholders. And a lot of the reason I like the real estate companies and they do consistent types of dividends, not all of them, not even most of them, but some of them, is because, for instance, like the one I invest in, they do a whole bunch and they have a lot of money that they receive every month. And so they wind up paying out shareholders every month. And to some degree, it probably helps with their own taxes. And so essentially, you can generate an actual income from this. And you could start as easy or as low, like the stock that I like investing in, the AG&C stock. I believe it's like $10 a share right now, and the dividend is 12 cents a month. So,
Jeez.
if you get, yeah, it's not bad. I mean, you get 10 shares, you're making $1 a month. So it's $100 and you'll make $1, maybe a little bit more. You'll make like $1.20 or whatever. So yeah, roughly their percentage is like they do about it fluctuates based on the stock price, right? Because they always pay 12 cents a month. Historically, they've been doing that for years. So whether the stock price is $16 a share or $8 a share, which it's been at both of those, they're still paying 12 cents a share. So you're getting between probably about 9 to 15% per month on your money.
Oh, so $100 is $12.
Correct.
Oh, okay. I thought you said it was $1.
Oh, sorry. No. Hold on. Sorry. Yeah, it's not per month. It would be $1.20. It'd be $1.20.
Okay, so it's 1.2%.
Yeah, it's for the year. Sorry, it's annualized. When I was
Oh,
saying not, but they pay you per month, right?
gotcha. I was about to say, I'm going on there right now. This podcast, 12% every month. Let's go. That's probably the
Yeah. No, that'd be phenomenal.
Yeah. All right.
Oh, sorry. Go ahead.
Well, I was going to dive into the biggest thing that I'm really interested about is this laundromat, and I'm sure a lot of people, are probably interested in this too. Like, why a laundromat? I mean, does it generate a lot of cash flow? I mean, where is this laundromat?
Yeah, why a laundromat? I was bored. No, to some degree, actually, that is true. But the other degree is again, just how can I make more money? And so our laundromat is located in Brooklyn. And more specifically, for anyone who's familiar with Brooklyn, which is in New York, it's an area called Bushwick. So it's a really dense area with high amounts of population and all old apartment buildings. So none of them have washers and dryers in them. Super great area. It's actually pretty insane how much volume there is, because for reference, my laundromat's here. Our competitor is directly across the street, and we stare into each other's laundromats, and we're both completely full and busy.
Wow.
So,
I mean, that's pretty crazy.
yeah.
So how big is this laundromat? How many machines? How often do they go out?
Well, we just got brand new machines. We took out a pretty sizable loan. We got brand new everything. So our previous machines were 20 years old, which is pretty much the lifespan of machines. And they were breaking down every other day or every few weeks. Even the ones we fixed would be broken down in a week or so.
Mm-hmm.
So there was a lot of issues with older machines. New ones, I mean, we have barely any issues anymore. Every now and then, maybe there's something stupid, but it's nothing crazy. We have 20 dryers. So most people may or may not know this. The dryers are typically stacked, and they're one unit. So, you'd have one unit, it's stacked. So we have 20 dryers, which means we have basically 10 units. We have 4 large dryers, which are 50 pound dryers. You put a lot of clothes in there. Sorry, washers. We have 10 medium-sized washers. And so those are about 30 pounds. And then we have the smaller washers. We have we have 12 of those. And those are I think 15 pounds. So we have about, overall, I'd say we have about 50 something machines, about 50, 54, 56 machines.
So before you had to replace all these washers and dryers, what would you say you gross on an average month, right? Without fixing the machine. I guess you probably factor that in though too.
We did have to factor in repair expenses. That obviously saved us money. Plus, here's another thing. newer washers and dryers are energy efficient.
Mm.
We had these things 20 plus years ago, right? Or 20 years ago. What was going on in the year 2003?
Mm-hmm.
Like nothing that's going on today. So we also had a lot higher water usage. We had higher energy usage. So getting the new machines was a really big play to not only save us in utility, but also increase foot traffic, which obviously increased profitability because now we had people wanting to come to us because we had new machines. So overall, I mean, the gross had been, I want to say it really does vary a little bit or a decent bit because it could swing based on the month between 20 to 30,000 a month.
So if it grosses that much, how much would the actual startup cost be for something like this? I mean, can an average Joe go in there? I mean, those sound significant, right? Like getting that much on a monthly basis. Like did was it always that one from like day one? Or like
No, so I mean, there's a lot to figure out with a laundromat now. For instance, the average Joe either can or cannot based on the fact of if they could get a loan or raise money. So we raised money between friends and family. I went to all of my close friends and my family and I said, hey, we're going to buy a laundromat. Do you want in?
mm,
And initially, the way I structured it was a loan. I said, do you want to come in? We're looking for a minimum check of 10,000 and we will pay you back. I think the number was like we were going to pay them back 15% per year or 10%. It was one of the two.
not bad.
So yeah, so we went around to everybody. I had my mom and dad buy in, and then I just call him my brother-in-law, and then my brother-in-law. So those were them two, and then my friend had three of his friends buy in. So everybody was coming in for loans, and so what wound up happening was after we bought the laundromat, and it's really funny how people operate, right? We got a crappy laundromat for $140,000. It was beat to shit. And honestly, if we knew better and we knew more, we could have negotiated that price down probably to 70, 80, or even 90,000. But we didn't know better. We thought we got a great deal. Instead, the deal was not that great, and we could have really beat it down because of all the things that needed to be done. And we just didn't know that. So, with that being said, we also put in $10,000 each of our own cash and obviously our time and sweat equity. So we raised 70,000 between friends and family in a few months, and we had the down payment. So we paid 70,000 and the sellers held a $70,000 note for us. So we had to pay that off in monthly installments, and we were going to pay it off in a few years, like 5 years or so. But I negotiated a deal with them when we took out a loan to get the brand new machines. And so the deal that I negotiated was, hey, we're going to pay you, like we still owed them somewhere around like 56,000 or something. So we said we'll pay you 50,000 because they were like offended by that, but they took like 52,000. I don't know, whatever. So we're like, listen, we could pay you 50,000 right now, lump sum it out. We'll be completely done. Or you could wait 5 years and these payments will eventually kind of be silly because in a few years it's going to be diminished. So we were kind of going back and forth with them. They didn't want a discount on the lump sum. They wanted like the entirety of their money, so they only gave us a few thousand off, which is fair, but at the same token I tried to negotiate. So we did that,
As you
and then we
should.
got a loan. Yeah, as we should. And then we got a loan for the new machines, and then we offered for people to buy in more. So we said, "Hey, instead of having a loan, would you like to have equity in the business? And now you'll be on a revenue share. And the revenue share will be all the money that we collect every month that doesn't go into the savings because we have a savings account, right? Where it's our emergency fund. And once we're at an emergency fund, we just pay out everything that's left every month to all the investors. So you'll get dividends based off of your equity percentage. So people were very open to that. Everybody converted their money to equity. But what was really annoying about that is after everybody converted their money to equity, we had 140,000. We could have bought the damn laundromat outright, had zero debt. So the silly thing is, is that people want to see, and this is what I learned. Like people want to see that you're doing the thing before they really trust you. Because once they came in and they saw stupid stacks of cash, they were like, can I invest more? And it was like, this is what we were saying was going to be here.
That's to be honest, that's life though. I mean, that's how it
Yeah.
always, especially with friends and family though.
Yeah.
I don't know why, but yeah, the original trust is like they trust you. Then
Yeah.
once they see that it's working, they're like, okay, I would definitely want to get in now. Yeah,
Right.
give
Right.
me a bigger taste.
Yeah.
Yeah,
So then the funny part was, of course, like at first we weren't profitable because we didn't know what we were doing and we were sold a lie because we didn't vet it properly. So we were losing money. So, of course, then everybody's like, so when are we going to get paid? I'm like, well, you guys will get paid when we get paid because now you're all owners and you're in the shit with us. So
so
we lose the money, so are you.
so you've had this thing for 5 years now, 4 years now.
No, 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 no. It's been coming up on 3 years.
Oh, so it's fairly new. I mean,
It's fairly new.
even 140,000, that's pretty good for 3 years ago. So, do you think if somebody came in, a Joe Schmo, and what advice would you give to anybody that's looking to, start a laundromat?
All right. So one is, here's another resource for anybody who might want to get a laundromat. It's very hard unless you're going to start one from the ground up, like you're just going to open your own. It's very hard to get loans from banks because banks are aware it's a cash business and they don't like lending to cash businesses because it's very hard for them to understand what you actually make. So what I found through research and just time and effort was that there are specific companies that deal with cash businesses. So the way we got a loan was by going to this company called Eastern Funding. So you would have to look into Eastern Funding. Eastern Funding will provide you a loan for a laundromat, for a deli, for a car wash, basically any cash business because they understand it. That's their thing. They only give loans for cash businesses, so they know everything about them. So that's one, is you need to find like a proper dealer. Number two, if you want to buy a laundromat or any business for that matter, you could go. I found my laundromat on a website called Biz Buy Sell. People don't understand. There are actually websites out there where people are trying to just sell their business and you could buy it. Another part is understanding there's a whole process to it. Once you go on Biz Buy Sell or whatever the case, like a lot of the businesses are anonymous on there. You're not going to be able to find their business until you actually show you're serious and show actual interest, like pay to speak to the realtor. Then you might have to sign an NDA. Then you might have to show proof that you have income or money that you could purchase this thing with. And then after that, they might, if they feel like you're qualified, they will let you come and check out the laundromat. So, or whatever business, right? Because a lot of people are protective because they don't know. You could be a competitor looking to see what laundromats are looking to sell, and then you could try to screw them or smear campaigns or whatever. So, businesses will protect their info before until they feel that you're safe enough to show the actual info to. So that's one big thing. The next thing that I would say is like if you're going to go and buy it, what you want to do and what most owners might be open to is we requested a trial period. So we said we want to know what it's like to own the laundromat for 2 weeks. We want to come in while you do collections. We want to come help collect. We want you to show us everything you do, and we'll come every time you come. And we're basically just getting live training and seeing how the laundromat ran before we committed to doing it. Another thing we learned is to buy a cash business, especially a laundromat, you can't really take people's word about their income. You have to actually cross-reference it with their utilities for like a whole year. You can't just do like, oh, let me see your utilities for the month. Like you're saying you're making X per year. Let me see the utilities for the year. Let me see the proof that the machines have been running the amount that they need to show that you've actually been earning what you've been earning. And then asking about the smaller details of like how old are the machines. This was a big one. Like when did you last jetty the pipes? I think that was a really interesting thing because it cost us a hell of a lot to get the pipes cleaned. You're supposed to do a minimum of once a year. This woman didn't do it in 20 years. About 70% of the pipe was blocked with solid concrete like soap because it was just hadn't been cleaned in so long. And then of course understanding the demographics of the area is super important because we tried to launch different services, but it just didn't work because of the demographics. For instance, lower income people, which is what a lot of our main demographic was, they don't like spending unnecessary money. And who could blame them, right? If they're not high earners, they're probably more diligent, more budget friendly, and more concerned about what they're spending on. So if you were to go put a card membership like machine in that area, it wouldn't do well. They don't want to pay an extra $5 for a membership card and then $1 if they lose their card and then put money stocked away on a prepaid card. They don't want to do that. So there was a laundromat in the area that tried that and it wound up failing or not doing as well as it could because of the fact that people were always complaining. They're like, how dare they charge us an extra dollar or $5? And to us, it's like, oh, that's not a big deal. But to people who are really conscious of their earnings because they have to make it work, so they got 3 kids and they're not crushing it in life, like they're gonna get pissed at you over $1 or $5. And so there's so much that actually goes into buying the laundromat, but it's like everything else, or like I was talking about with even the stock market. It's like, do your research, know the demographics, know the state of the laundromat, know the condition of the machines, and know what needs to be done. And there's just so much that you could actually look at. So that's my advice. Like really just research and vet and work there for a little bit.
I mean, it kind of makes sense. It's just if you're looking to open up anything, you actually have to put in the hard work to see what
Oh
goes
yeah.
into it. Yeah.
Yeah. And I think the biggest thing is that ultimately, like people who say, "Oh, laundromat is it's not a lot of work," and because there's that woman out there, her name is Cody Sanchez, and she's always talking about how laundromats are like the easiest thing, and I only spend like an hour a week on it. It's like, no, that's not true, like at all. Unless you can really afford somebody who will full time manage it for you, that's not true. That's not even close to true. When we first started the laundromat, me and my partner Aunt, we were there like our entire weekends, and we would be there from like I don't know, man, 7 in the morning until like 8 at night or 9 at night. And that would be like just one Saturday. Then we would also have to go during the week for problems that would come up and to change machines and do collections. Like we were just spending so much time there, and because we had no money, we were paying ourselves like $200 for like the equivalent of maybe 30 hours a week. And
Yeah.
that was all we could do.
But that's what you have to do.
That's
And
all, yeah.
if you can't afford a full time manager, those are probably, like you said, membership cards because your equity, your net profits go way down if you're gonna afford to pay for somebody to sit in the store and do
Yeah.
those, collections and look at machines and see if they're gonna break or whatever it may be.
Of course. And that's the thing too, is like some issues are actually really serious. Like there were times because we got new change machines too, but there were times both change machines would be out. How do
Mm,
you run a laundromat where you can't provide change for people? So guess
right.
what? One of us, Zoom. And mind you, we live somewhat close to each other. We're about 15 minutes away from one another, but he's in Brooklyn, I'm in Staten Island. And the drive to the laundromat on peak hours is like over 2 hours
Mm,
because it's not close to us.
right.
And so, you have to drop everything and go 2 hours one way. And then when you spend 2 hours driving there to fix, which is really annoying, it's like a 5 minute fix. Then you just find things to do. You're like, I can't have driven 2 hours and then another 2 hours home to spend
Right.
5 minutes here. So now it's like, what can I do around this place?
I like that. I mean, that's a good mentality to have. It's a good partnership too, is what you want from your, partner.
Yeah. So, I mean, there's a lot that goes into it. And even I joined like laundromat forums once I really got into like buying and understanding and trying to own one. And it was funny too, because people in there are laughing. They're like, all these people out here think you're going to buy a laundromat, work an hour a week. Some of them, some of the people in there are like, I spend more time in my laundromat than I did when I had a 9 to 5.
Hmm.
Like, people have these very unrealistic expectations because you have this woman who's the equivalent of a multimillionaire who probably just pays people to run it for her, or she's got the most perfect laundromats I've ever seen, which I highly doubt. And she's out there telling, oh, it's easy. I spend like 20 minutes a day or a week on it. And it's like she's full of crap. So if you're gonna buy something like this, get ready to put in the work.
I think there's both sides of the aspects here, and I'm coming from not owning a laundromat or anything like that, but just starting a business from the ground up, an employment business where I feel that at a certain point you do everything yourself, but once you can afford to hire somebody, even if it's not full time, part time, to check in on the store, to spend 20 hours worth of time on a weekly basis, That's going to free you guys up from time. And then you guys could probably open up another one and then another one and then
Yep.
rinse and repeat. And I'm assuming that's where she's coming from, is the whole delegation, rinse and repeat process. And if she
So
owns the real estate, that's definitely the whole McDonald's founder situation. It's not about what you have, it's really about the real estate. But that's a whole other thing too.
yeah, I mean, listen, I don't know well enough what it is that she's talking about, but the assumption is formed in the sense that I have people who don't know anything about laundromats always asking me when they hear I own a laundromat and being like, "Oh, Cody Sanchez says all the time how easy it is to own a laundromat." So I'm thinking about buying one. I'm like, if that's and that's a typical response I get. Like people are always telling me stuff like that. And so to me, it seems like what she's doing is she's painting a very unrealistic photo. Cause like, I agree with you. If, for instance, if we had 5 laundromats, we could pay and this is how a lot of laundromats will do it. If you have multiple and you have like 4 or 5, realistically, you could probably pay a manager about $20,000 per laundromat. And once your laundromat is properly streamlined, realistically, you probably only have to go to that one a few times a week unless you have serious issues, which we had at the start. And then you could justify it because if you pay them $20,000 a laundromat and you have 4 or 5, that's $80,000 to $100,000 a year for some simple management. And then you're right. Then me and my partner have our time back, and it didn't kill us because the reality is our laundromat probably makes conservatively, I would say maybe between like after all bills are paid and whatnot, probably like 50 to 70,000 a year, and we're paying investors. So realistically, if we brought in a manager and we gave him 20, where and it's a $50,000 a year, we're not making much. We're making 30,000 over the year, and like then what is that? But
Right.
if we have all these different laundromats and now we're pulling that all together,
Yeah.
the dividends are significant as
Right.
opposed to like having nothing in a few locations. So there's even that. There's a specific amount of laundromats that you need to have to actually justify having a manager.
Which makes complete sense.
Yeah. Well, one other thing that I didn't share that I think is also really important noting, because some people have in their laundromats what's called like a working manager. So the same person that they employ to do like drop off and fold service is also the manager of the laundromat. And realistically, you don't pay them much more, but you just give them the title and they kind of take it on. So you make like one person the workhorse, which I'm personally not a fan of either. Because like you get a disgruntled employee as the manager. I don't know. It's not a good feel. But there are some people that will do that, and we don't have any employees anymore. What we did is we got rid of our employees, and we had a woman come in as an independent contractor and do the drop and fold service out of our laundromat. And that significantly boosted profits as well as saved us money because it now made all the money that we would have lost on like paying an employee and all that other stuff. And we've given them 100% of their profit.
Yep.
And then they just spend it. And so they get profit and we get profit. And it really worked out a lot better. But that's another reason we would actually have to hire specifically a manager because of the fact that we don't actually have any employees.
Right. Well, which is a good thing too. There's a lot of pros with contractors or as W-2 employees as well. So
Right.
interesting. Well, if you guys have more questions, I'm sure Vin wouldn't mind to answer any more questions. Slide into his DMs. Vin, is there any other investments that you want to kind of speak on here today?
Well, funny enough, we're actually me and my business partner were actually talking about. We're thinking we're gonna try and buy another laundromat soon. So we're thinking of doing. I'm not even joking. That was literally a call I had with him today. So
That's so funny.
yeah, I mean, we know what we're doing now, so we're ready. Like we're
Right.
ready. We know we're gonna get it, and like as soon as we get it, it's just gonna be. I don't want to talk too highly, but we're very sure we can take whatever we get and make it profitable. Like we have the experience, we have the knowledge, and
That's
he's
what's
also
powerful.
he has and he has a very super active role. Like so we split it up, right? Of like I started doing more like back end stuff and handling littler tasks, and he took on the manager role. We pay him a management fee. We make sure that he's compensated for the additional work that he does. And so his thing is like, hey, I'll keep managing it and I'll manage the new one, and then let's see if we could go ahead and buy a new one now. So we're already trying to figure that one out. That's going to be our next thing. And That's pretty much it. I think the other thing I do, but it's a little bit hard for people to get into, in my opinion, is I do quick, like, hard money lending. I have a very trusted, and I'm really using that term properly, a very trusted friend in real estate, and he like will do fix and flips. So he'll buy things, he'll get them wholesale, or he'll, go bid on a foreclosure or whatever, and then he'll fix it and flip it, and he'll come to me and he'll say, hey, like, I need $10,000, and in X amount of time I'll give it back to you with X percentage paid out. And so I'll do that a few times a year and get like 30 or 40% on my money, or whatever the case might be. But the key is, like, he's a trusted guy. I know his track record. For instance, I know his integrity is great. I know that even if he lost money, he would always pay out his investors at the detriment of himself, and he's done that time and time again. Because, like, that's, and when I say time and time again, I don't mean he's always losing. Just to be clear to anyone listening, it's more like if he's lost 2 to 3 times in his career, every time he's always paid back people their money, even if it hurt him. So he holds maintaining integrity and relationships at a very, very high standard. And funny enough, he was one of my coaching clients for a good bit. So I not only know about his business, I know about him as a man, and so I trust him. So I would say even that, if you have friends that are in real estate and you really trust them, and ask them, hey man, do you do fix and flips, and do you ever need some hard money that I could give you for a return? And if you trust them and you think they're good people, and that could be a conversation that you have, because that's kind of how it came up with us. Like, he was like, oh shit, he was telling me, I remember in one of our conversations, like, man, he's like, this guy just pulled out, I really need 10,000 to close out the deal. I'm like, I have 10,000, I could help. So, and then from there it just started, and now we've been doing it for a few years together, so it's pretty great.
Well, I mean, here you have it. I mean, Vin and myself are completely different investment wise, which is crazy, and I love it at the same point. And Vin, I can already tell you, I'm in. If you're looking for investors for the Laundromat number 2, I'm in. But it's pretty awesome. So if you guys have more questions about the hard money lending, good stock choices on, paying dividends, or even you just want some, profitable strategies, that, once again, we are not financial advisors, but if you're
not financial advice, we're telling you purely what we do. You do what you do.
Yes. These are just our opinions, but still, we'd love to help out. We'd love to have a conversation. We appreciate all the comments. If you could like, share, comment, subscribe on everything that we're, hosting on, that'd be awesome. And we're going to cut this one. It ran a little bit long here, and we will see you guys on the next one. Since I'm taking the reins on this one, I'm your host, Shane.
And I'm Vin. Goodbye, everybody.
All right, guys. See you on the next one.